Hey, Mike. Thank you for having me. It's definitely a turning point in some ways, but I think it is particularly so for U.S. energy. The rest of the world remains in a pretty bad place. For example, today, U.S. natural gas prices dropped 16, 17% on better than expected inventory numbers. But European gas has zoomed up and is now trading at $44 per MMBTU. So the gap between the U.S. and Europe has just widened because, again, there is less gas flowing from Russia into Germany. So I think it depends where you look at. Thermal coal prices, for instance, are also close to all-time records, about $100 a barrel of oil equivalent. So, it really depends. I think there is a turning point. The economy is getting worse, no doubt, but the supply scarcity is still winning the game in some regions.
Yeah, I mean, obviously things like copper and wheat, they've had very high momentum moves and they've sharply corrected. So I guess clearly the macro concerns are going to exert some gravity there. But what would be the, I guess, investment plays on something like that? If you stay, parts of the world still seem very tight and it seems like there's more to run in the energy story.
Right. That's right. I mean, I think probably in the next few months, we're going to see a continued deceleration in economic activity. I think that much is set. And probably that means the industrial metals could suffer a little more into the second half of the year. I think also we could see a pullback in obviously U.S. natural gas had a big move down now that the Freeport LNG facility is not exporting as much gas as before because of the shutdown, right? But on the whole, I still think the second half of the year for energy is going to be very tight. Remember, Russia keeps playing games there, and we could see global energy staying very tight. If Europe faces, let's say, a reduced energy supply situation, they could go out and start buying heating oil and diesel for backup fire generation, for heating homes, if there's no gas availability. So I still think the second half of the year for energy could be pretty tight.
Yeah, so that's the actual real-world usage and supply story. In terms of commodity as an asset class, there has been a revival of the idea that maybe it's going to be favored more by institutional investors. Stocks and bonds have had a rough time coming into this year. Are we back into saying that there's going to be an institutional push into this area and playing some sort of idea of a super cycle, perhaps?
I think there is definitely a growing idea, and we had our commodities conference last week where we had a really great set of panelists. And I think there's consensus the next 2-3 years are going to be pretty good space to be in the commodity markets. Because even if we have let's say a shallow recession where demand pulls back, ultimately it's a supply story. We don't have the BTUs, we don't have the barrels, we don't have the tons of copper, the tons of coal, because we haven't really invested that much in the last few years. So even as we withdraw the monetary liquidity and inflation pressures fade in other parts of the economy, I think the commodity sector is going to stay quite tight for the foreseeable future. So, I mean, you can call it a super cycle. In commodity land, we say, well, we don't have the volume, we don't have the units, so we have to rein in demand, and one way to do it is higher prices. So I do think that we're going to see that for quite a while here. And commodity returns are going to be quite attractive if indeed curves stay inverted. So we have spot prices above forward in what's called backwardation, which is also quite a favorable shape of the market for commodity returns. So you have those factors flowing in. And then there is gold, which has not had a great year, but it's been a lot better than equities and bonds. So I think as we see people crawling back into long duration assets, and of course there's been a big rally in the 10-year in the past, and 10-year U.S. Treasury bond in the last few sessions, I think we'll start coming back into gold as well in the second half.
Yeah, see how that goes along with the real yields picking up. Francisco, thank you very much. Appreciate it.
Thank you.